Taco.
Web video has grown up. Distinguish yourself with professional custom video for your business. Get started at johnlothianproductions.com. What led to your retirement decision?
I've been around in this business now since 1982, when I joined from a Wall Street law firm. I joined the Commodity Futures Trading Commission, stayed there for 4 years, and basically I've been at Brody White, which then became part of FEMAT, which then became part of Newedge, for 26 years. So I've basically been in this business now for over 30 years. And I think that after 30 years, it's important, no matter what you do, to at least take some time and think about, other things that you could be doing.
Looking back at that 30-year period, how do you feel the industry has changed?
I think the amount of regulations that have been added to this field are just dramatic. And obviously we've come full circle from the Commodity Futures Modernization Act, which lessens regulation, to dodd-frank, which is just increasing regulation dramatically. The first day at the CFTC, I went down to the floor of the Commodity Exchange Inc. and stood outside the gold pit, which was dramatically filled with all sorts of people, and I couldn't remember what was going on. And I think that now, virtually all the pits are shut, and that's a big difference. The speed of trading, the quantity of trading. Is just so dramatically different than back when I entered.
What are your thoughts on the globalization of the futures markets?
One of the great things about the futures industry is how easy it's been, frankly, to access international markets if you were a U.S. person. And it's really been very, very seamless. I think that one of the sad aspects of the MF Global circumstances is that people are now realizing there's a price for that seamlessness, which is that if you're trading Hong Kong through an account in the United States, it may take a bit of steps to get your money back. If you want to access non-U.S. markets seamlessly and easily, then you're basically going to have to submit yourself to the local regulatory scheme, and that could have a bad consequence to you as a customer if there's a blow-up like MF Global and you trade internationally. It's the price. Now, you can fix it by outreaching and imposing U.S. regulations and bankruptcy all around the world, but that ain't going to happen. You can't have that kind of imperialism or colonialism.
Where do you see the most potential for growth in the futures industry?
I happen to think that the biggest growth will come from and to China. You can't have 1.3 billion people in a location and not expect a lot of growth. I mean, we've been very, very happy with our performance in our China JV, and that's without full legalized outbound or inbound business yet. We've always waited for the day where outbound business would be allowed and inbound business would be allowed. When that day comes, I think the volumes, which are already very heavy in the China markets, will just take off astronomically. One of the areas that needs to be evolved in China is risk management. And I think there's a lot of opportunities for firms to help the commercial clients understand risk management, refine risk management. And I think that as that happens, will strengthen the markets. I think the more that markets are based on fundamentals of hedging, the stronger they are. Speculation is just the oil. If you don't have a strong engine, which is the hedging machine, they don't work. I think that when the markets in China become more refined around that hedging machine, they'll become stronger. And I think that some of the outbound business will help the non-Chinese markets.
Where do we go from here?
I think if you're looking to a crystal ball 20 years from now, I'm not sure what an exchange is going to be. I'm not sure the exchange isn't just going to be some kind of forum in the internet. I think we're opening up an interesting door in dodd-frank, where we're saying that if one clearinghouse clears a product, then that product now is mandatorily cleared. Anybody can clear it. Everybody has to execute it. So you're creating the potential of multiple markets listing the same product, multiple clearinghouses having the same product. Well, at that point, you start saying, well, how do these firms compete? Okay, how do the clearinghouses compete? Do they compete by reducing margin? You don't want that to happen necessarily. Where's the edge? Okay, so I wonder whether you start having consolidation in the clearing space, even more than we have now. Okay, just like I think you're going to have consolidation in the brokerage space. I think that one of the unintended harms of dodd-frank is aggregating so much risk in these mega clearinghouses. I think we're going to seriously regret that down the line. So from a risk perspective, I hope that doesn't happen. But given the current momentum, I'm afraid it might.